could Bitcoin be at 100,000? Why didn't Bitcoin go up more? 700,000 people that actively care about crypto. 700,000 people out of a population of 8 billion people, right? We're just a speck. Regular people don't care what's just happened. It matters to us. It matters to these ETF providers for the customers they've got. But the average Joe investor or average Jane, they don't really care yet.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Raoul Pal sees that only 700,000 people out of 8 billion people in the world care about crypto, which means that crypto is still a niche and speculative market. Most people are not aware of or interested in what has just happened in the crypto space, such as the launch of the first spot of Bitcoin ADAS. Raoul says that the only ones who care are the crypto enthusiasts and the ETF providers, who are the companies that offer the funds that track the price of Bitcoin and can be traded on the stock market. Average investors are not yet attracted or convinced by crypto. He asks some questions that reflect his curiosity and uncertainty about the future of Bitcoin, such as whether it could reach $100,000 by the end of the year, and why it did not go up more after the ETF launch. Let's listen to more of Raoul's insights and opinions on Bitcoin and other topics.
A lot of the GBTC orders, don't forget, a lot of hedge funds were buying it at a discount and hedging. And today it collapsed to zero because it went to an ETF. So there's a lot of selling of Bitcoin that was coming out of that. So there might have been $1 billion of selling that came out of that. So as people were unwinding that trade and taking it off. So that's why the market was a lot choppier. It's not really people taking profits. It's people taking profits from that particular trade and exiting some of GBTC. So that makes more sense of it for people. People are like, well, why didn't it happen? The laughable thing was how obvious it was that the market, I love the way the market goes, well, now we've got the Bitcoin one. Where's the ETH one? ETH starts wildly outperforming. It's like, again, hilarious. The market doesn't give it 1 second before moving on to the next thing with its regular people don't care what's just happened. It matters to us. It matters to these ETF providers for the customers they've got. But the average Joe investor or average Jane, they don't really care yet. But it'll filter down as they'll see more reports on it. Their investment advisor will tell them about it. And then before you know it, it starts building momentum. They see the price rising. Volumes will slow down. Let's assume tomorrow is like 500 million, whatever it is, right? It's going to be a lot less. But I said this about a year ago. I said, well, the Bitcoin ETF all depends on where the Bitcoin price is when it launches. And I said, look, if it's about 50,000, I randomly chose that number and it's right there.
Yep.
And not because I'm a prophet or anything, but I was like, well, if it's around 50,000, people are just going to go, well, it's not far to the all-time highs. I want to get it before it gets to the all-time highs. And that momentum cycle starts. Because price is the driver of narrative, is the driver of volume, is everything in this space. So it's kind of come at a perfect time. And then let's say it goes quiet for a little bit. And then we get the Bitcoin halving noise, and then the crypto, the macro cycle, the rate cuts. That's all to come ahead of us. The liquidity cycle, all of that. So it could not have come at a better time. So I think the probability is it does better this year than people expect. What wouldn't surprise us by the end of this year? Could Bitcoin be at 100,000? Yeah, that would seem right for a normal bull market. So, okay, that's a, 2.5x from here or 2x from here. It doesn't seem impossible, which is why I've also been talking about this could be quite a bit of a bubble cycle, whether it's front loaded, so it all happens in this year, or whether it really overextends like some of the prior cycles did. I think that's possible here. So we just have to wait and see. 88% of people who were going to buy crypto were going to wait for the ETF to come. So They didn't expect it. It's now come. They now have to go to their clients. This lag I talked about. They have to go and have golf with their best clients and sit down and have that steak dinner and the bottle of expensive wine and say, you should be buying some Bitcoin. They don't go send out through some electronic platform. It's this. That's what we will see. And then they will get the incoming calls from their friends at the golf club who've heard it from their other friends that they're making money in this Bitcoining thing. Get me in.
Raoul talks about how the launch of the first Bitcoin ETF in the U.S. affected the market for GBTC, a trust that holds Bitcoin and trades like a stock. He says that many hedge funds were buying GBTC at a discount and hedging it with Bitcoin futures, but they unwound this trade when the ETF came out, causing a lot of selling pressure on Bitcoin. Raoul also says that the market quickly moved on to the next opportunity, which was the possibility of an Ethereum ETF. Ethereum started to outperform Bitcoin as investors anticipated more demand for the second largest cryptocurrency. He explains that the Bitcoin ETF is a big deal for the crypto space, as it will attract more investors who want exposure to Bitcoin without the hassle of buying and storing it directly. The timing of the ETF is perfect, as it coincides with a bullish phase for Bitcoin, driven by price, narrative, and volume. He speculates that Bitcoin could reach $100,000 by the end of the year, and that it could also enter a bubble cycle, where it either spikes and crashes in a short period of time, or it keeps rising beyond expectations for a longer period of time. The ETF will have a lagged effect, as investment advisors will need to convince their clients to buy Bitcoin over time. Raoul says that this will create a word-of-mouth effect, as more people will hear about the success of Bitcoin and want to join in.
Let's play that game. Hunter as well gave it a 50-50. And he's been deeply involved in all of this. And he said the difference with the Bitcoin ETF is there was that court ruling from GBTC and they couldn't not do it. So he said, so you can't infer that. And there's always complications behind it. So he'd say 50-50. And so most people are saying 50-50. My personal view is actually Gensler wants ETH and BTC into the financial system. If they're the two largest assets, you want control of them by the incumbent firms. Because if not, it's a threat to have this independent financial system. It's a threat to their whole system. So even though he hates this stuff, he'd rather be frenemies than enemies. So that's my hunch here, is that regardless of what he wants, he has to accept it. Maybe there's a bit of delay, a little bit of delay, not rejection, but delay, blah, blah, blah. So let's say by August, which is the second date or something, let's assume that by August, we've probably got a decent chance. I would say 75% chance. All on crypto Twitter is everybody is a mid-curve. That mid-curve meme, right? Arguing with each other about what is liquidity, what is that, is there a recession, blah, 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 all day. It's overvalued, this. The liquidity curve, the everything code just says liquidity in, I buy it. That's it, right? And liquidity in drives assets, and the more liquidity, the more people take more risk. Simple as that. That's the understanding. So when you see liquidity bottoming, it allows you to start looking at ETH was in that free fall then, but it maps perfectly liquidity, and liquidity had bottomed. I'm like, okay, this is a probability. You got a chart pattern as well that it all matches. So that liquidity cycle makes it super easy. But the everything code is really the culmination of 30 years work. But what most of us didn't understand was 2008, the entire world changed. We know it broke. We know the debt system broke. And people have been trying to look at the world ever since, including myself. I only figured this out like 2.5, 3 years ago, 2 years ago. And the everything code I only wrote last year. Is that something fundamental had changed because of the use of the balance sheet and liquidity to manage things.
He says that he thinks there is a 50-50 chance of getting an Ethereum ETF approved by the SEC based on what he heard from Hunter Horsley, the CEO of Bitwise Asset Management, a crypto fund provider. The approval of the Bitcoin ETF was influenced by a court ruling that forced the SEC to accept the conversion of GBTC, a trust that holds Bitcoin, into an ETF. He believes that Gary Gensler, the chair of the SEC, wants to bring ETH and BTC into the financial system, even though he dislikes crypto because he wants to control them and prevent them from creating an independent financial system. He expects some delay, but not rejection, of the Ethereum ETF, and that he gives it a 75% chance of happening by August. He follows a simple rule of buying assets when there is more liquidity in the market, which means more money available for investment. He says that liquidity drives asset prices and risk-taking behavior. He says that he uses the liquidity curve, which is a graphical representation of the relationship between liquidity and asset prices, to identify opportunities. He says that he saw ETH bottoming out when liquidity was low, and that he expected it to rise when liquidity increased. He says that he also used chart patterns to confirm his analysis. He wrote a book called The Everything Code, which explains how the world changed after the 2008 financial crisis. He says that he realized that the use of balance sheet and liquidity by central banks and governments to manage the economy had created a new paradigm. He says that he spent 30 years studying the markets and that he only figured out this new code 2 years ago. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.